All right, we're live. Let's wait YouTube to catch up. I'm ready to go. All right, awesome. We're live. So, what's up, everyone? Welcome to another session. Today is December 2nd, 2020, and we're back again for a daily dollar analysis. So, the dollar is making its way lower. Here's our target, our short-term target, 91 flat. And we said if we get there, this should activate at least some of our trades for the majors, such as Euro, maybe even Aussie. Pairs like Pound are under a lot of pressure. There's actually a good article here. Keep this one open because this one's important as well. But daily effects, they do a really good job. So sterling hit further as EU hardline countries push for no deal. Obviously, they're still dealing with Brexit, so it's not always the case that if dollar index goes down, that every single major will go up. There's obviously other issues at hand, but for the most part, euro looks very bullish, which we'll go over later in the session. But this morning, we had the ADP job numbers, and they came out worse than expected by around 130-ish K. And if you look at the forecast, it was 433,000 jobs. We came out with 307. And right now, Powell's testifying. I don't think he's going to do too much damage, but eventually we should reach this target. We made a low of 91.10. Our overall target was 91 flat. I think once we get there, we'll have entry for Euro. Euro activated our alert this morning, so it kind of spiked up, but it didn't close above our key level, so we're waiting for that. But yeah, nothing else to say about the dollar index. It's doing what we thought it would. Another bearish day yesterday, even though it was a nice bearish day. During yesterday's session, the actual morning session, this candle was closed up like this. There was actually no wick at the bottom, and so I think that's what paused the majors from really becoming bullish. We actually created a hammer, so it's kind of an important candle to watch out for because you can see this is a typical textbook hammer where there's zero wick at the top and the long one at the bottom. And so, some signs of possible retracement. So I do think we'll eventually get down to 91 and then expect a bounce from here. Friday's NFP, so we may come here and then bounce on Friday. But hopefully for us and for our trader dealers, we just break this level and then head down lower. Long-term target is obviously this one down here. So typically when the dollar index is predictable and it's in a trend, it's much easier to trade. But obviously, for example, last night the UK announced it'll be using, I believe, the BioNTech vaccine, and they're going to roll it out next week. That's actually pretty crazy. So I think they're the first country that's going to start vaccinating people this soon. They're going to roll it out next week, right before the holidays. So, that news came out, and I think the dollar index pushed up a bit, but since then it's come back down again. So we're dealing with a lot of stuff. You can't really tell when countries or nations will choose a vaccine and when they'll roll it out. But that was an interesting news that came out. There's a nice Twitter account you could follow for these news updates. It's called the Spectator Index, and they tend to release like major news events. So that was one of them. I don't even think Daily Effects has an article about that. Let's see, no, they don't. But that's important because obviously, if that vaccine works, then the UK can start, reopening up and getting back to normal life. So, dollar index 91 flat should be reached by the end of the day. We might get a bounce from there, so we might have to hold off on the majors just for, I guess, the day. Hopefully not. I really wish we just come here and just break this level and then just continue going lower. But here's the long-term target of 88.74. All right. And Friday's NFP numbers, just to quickly go over, 500K jobs, less than the previous month. But unemployment is supposed to drop by 0.1%. So we're obviously hoping for a bearish result. So far with the ADP numbers, it looks really probable we may get a bearish result. But we've been pretty accurate. We've been pretty mixed with the jobs added. It's not been too accurate, but we've been pretty accurate with the unemployment rate. Every single time, the actual beats the forecast. So we may instead have a bullish result. So just, bullish result. So just be careful about that. It kind of sucks that in 2 weeks from now the holidays start, and we pretty much have like these 2 weeks to kind of get as much as we can out of the market, and then one of the weeks is NFP week. But you deal with the cards you've been dealt. There's always another week to trade, another month to trade. That's the beauty of trading. There's always another opportunity. So that's it for the dollar index. I wish there was more to share, but it's pretty simple at this point. That downtrend is pretty significant. After spending, from July all the way to October, just ranging, the dollar index has finally found a trend to end off the year. And like I said, if Biden wins the election, which most media outlets believe he did, I think they're still doing those court cases, but I think most people agree he won the election. It's going to lead for a bearish dollar to end off the year. So I do think we will continue to drop regardless if we get a bounce here or not. I highly doubt we'll get a reversal unless something major happens, like the U.S. starts rolling out vaccines next week. Because if they do that, then their economies can start to reopen as soon as possible, and then they can take a leg up on all the other currencies. So that's the dollar index this morning. Let's shift over to the paid section of the stream. So give me a few seconds.